Welcome, everyone, and thank you so much for joining us today. We're here to make sure you don't leave any stimulus benefits on the table, and excited to have some esteemed guests with us today. Let me share with you the format. First of all, I'm Kassar, founder and CEO of MultiFunding, for those who don't know me. And no, I'm not really in a fighter plane. I just like to think I am. Today's format is going to be a little bit different. We're going to have 4 quick 10-minute talks about different elements of the stimulus package to make sure that you're not leaving any benefits on the table. And after the talks, we are going to then proceed to Q&A, and we'll stick around for as long as you want to ask your Q&A. So the idea is hopefully that everyone who comes and attends here will pick up at least 1 or 2 good nuggets and ideas about what you're going to do. We have several guests with us today: Lynn Ozer, John Bly from Aprio, and our friends from Brinker Simpson, Kristen and Bob. So without further ado, we're going to start. Again, the format is we're going to hear 4 quick 10-minute talks, and then we will jump into the Q&A, and you will have the chance to ask as many questions as you want as we go through the session. Our first guest up today is Lynn Ozer, who's going to talk with us about SBA and how to take advantage of the benefits of SBA for acquiring a business. Lynn Ozer, we're proud, is the newly appointed president of MultiFunding. She is a strategic and highly accomplished financial executive with vast experience in small business lending departments, training existing and aspiring lenders on SBA's loan origination policies and procedures, and advocating on local and national levels for policies that prioritize small business. I prefer to simply call her the SBA queen. And without further ado, Lynn, the floor is yours.
Thank you so much, Ami. I really appreciate it. And very happy to be part of MultiFunding and involved in everything that they do to help entrepreneurs, specifically seminars like today, where we are presenting to you, along with some of our strategic partners, all of the benefits that we think you need to know about the stimulus package. To get started, Ami, if you would go onto the slide, the next.
It's all about Lynn. She's wonderful.
It's all about me. Anything you want to know. Okay. But the first thing I want to discuss is the fact that COVID has created some interesting opportunities. There are stimulus dollars out there for entrepreneurs. And there are certain businesses that have suffered greatly during this COVID time. And there are other businesses that have thrived. So interestingly enough, one of the things that has become very popular that we see are that entrepreneurs have reevaluated their position, and many of them have decided that this is the time that they need to pass on the torch. They're looking to sell their business, either to their existing management team, to their children, or to other businesses in the same line of business, or other managers who have experience in the business that they're about to sell. And that's one of the things that we want to talk about first today. As Ami said, we're going to talk about several different scenarios and aspects of the stimulus package. But first, we're going to talk about how the stimulus package may benefit someone or a business that's looking to buy an existing business. So we're going to analyze what we feel to be a pretty typical case study. There's a client who wants to buy a business that is for sale for $5 million. This particular client has about $1.5 million of cash available. And the business that they're targeting has earnings before interest, taxes, depreciation, and amortization of approximately $1 million. Okay. Now, with that in mind, the client, generally speaking, will take themselves to their commercial lender, regular conventional financing package. And what we have seen in this day and age is typically for a business of this size, the bank is going to ask for at least a 20% down payment, or in this case, $1 million. And then they will consider a $4 million bank loan. On this bank loan, it's most likely that they'll charge an origination point of $40,000, 1%. That's pretty typical, okay? And doing a loan for the acquisition of a business where the largest percentage of the purchase price is going towards goodwill, blue sky, and intangibles, if you will, they would most likely offer a 5-year amortization at approximately 4.5% interest. This would end up costing the borrower approximately $74,572 a month on a $4 million bank loan. So as we look at this proposal and the client or the borrower puts down $1 million of their $1.5 million in cash reserves, after this transaction takes place, they'll have approximately $500,000 in reserves to move forward as working capital in their new business. So we believe that using an SBA 7A loan to acquire a business at this point in time, based on all of the bells and whistles in the stimulus package, that this is a really good opportunity for entrepreneurs to purchase another business using this avenue. We feel that for the same type of transaction, the SBA proposal would look something like this: $500,000 as a down payment, $4.5 million loan, and right now, SBA is not charging any upfront guarantee fee. SBA's upfront guarantee fees on a loan of this size are 3.5% on the first million and 3.75% on any more than that of the guaranteed portion of the loan. In this particular case, because there are no real estate assets being purchased, the maximum term would be 10 years. 10 years compared to 5 years on a $4.5 million loan at 6% interest produces a monthly payment of $49,959, which, as you can see, is much less than the other conventional loan. And the beauty is it leaves the borrower with $1 million in cash reserves after their down payment in order to finance the growth of this new business and support their working capital position. Let's look at this side by side just to see exactly how beneficial an SBA proposal at this point in time really is. Okay. Up front, the bank's proposal is asking for 20% down and a point up front for the fees. So you're talking about $1,040,000. Whereas at this point in time, the proposal from the bank is $500,000, no fees to the SBA. So there's a huge savings right there. The bank is generally not going to go more than 5 years on unsecured paper, and the SBA proposal would offer a 10-year term. The interest rate of 4.5% sounds very appealing. The SBA's interest rate is higher, but we're going to talk about that in a minute. As far as cash available to the borrower for working capital, this client would have $500,000 if they went the conventional bank route, and they'd have $1 million if they went the SBA route. And the difference of the monthly payment is $33,113 in the first 3 months of payments. And then it drops to $24,613 benefit after the third month. Why? Because SBA is offering 3 months of paid principal and interest up to $9,000 a month at this point in time in the stimulus package. We know that most borrowers are going to look directly at the interest rate and say, why am I going to pay a 6% interest rate when on a conventional basis I could pay 4.5 million for the same deal? Well, first of all, remember, you're purchasing a business that has $1 million of cash throw off, which is available to service the debt. On the conventional side, the annual debt service is $895,000 per year. On the SBA proposal, the annual debt service would only be $600,000 a year, leaving you with a substantial amount of working capital. And that's really the key here. Why would you want to strap your business down to a debt service of that high while you're still getting used to the new business and running the new business? So this particular product gives you a 10-year term and allows you not to have a prepayment penalty and gives you lower payments in the beginning while you are transitioning into the ownership of this new company, where there may be many unexpected turns and twists that you might not be aware of. So the SBA proposal with the lower down payment, SBA's minimum down payment is 10% of the total project cost. SBA lenders differ across the country. Although 10% is the minimum, they may charge up to 25% as an equity contribution, depending on the lender that you choose to work with. Most delegated lenders would prefer to use the 10% down because they can get more comfortable with the unsecured portion of the loan. The non-delegated lenders that need the SBA to approve the loan and the credit generally will require a larger down payment. Remember, a seller can help with the financing if the borrower does not have the 10% required equity injection. So in our example, if the borrower doesn't have $500,000, the seller is able to finance up to 50% or $250,000, for this particular project. That loan would have to be on standby for the life of the loan. And it definitely shows the bank, the seller's confidence in the business, and the seller can hold back even more paper if the bank requires them to do so. And in a second note, the seller can charge principal and interest from day one, as long as the lender puts that debt service into their analysis to determine whether or not the borrower can actually repay the proposed SBA loan along with the seller financing. What do you need to show the SBA in order to get a business acquisition loan? You would need a current balance sheet and profit and loss statement, the last 3 years of federal income tax returns of the business that you're targeting, the proposed bill of sale that includes all the terms and conditions of the sale and delineates exactly what purchase price is being allocated for inventory, machinery, equipment, furnitures, and fixtures, as well as the all-important list of expenses tied directly to the previous owner that will go away with the acquisition of this business. And that's what you need to provide to the bank. We'd like to encourage you to use a delegated lender. In this case, like we said, they're more apt to go with SBA's minimum requirements. They will give you the maximum SBA term and are probably more comfortable with a less collateralized situation. You can do larger than a $5 million transaction. utilizing this SBA portion as a piece of it, and then ideally with the same bank, a conventional piece, which could be loaned side by side in a shared lien position, which is SBA calls pari passu, where the bank and the SBA share a first lien position. And another important fact is if this business acquisition does include the asset of real estate, you can amortize your loan over 25 years if the real estate is 51% or more of the purchase price. If the real estate is less than 50% of the purchase price, you can obtain a blended maturity or a longer than 10 years to amortize the goodwill and the other assets. So using an SBA guarantee to purchase a business or to buy out a partner is very advantageous at this point in time because the lack of fees, the longer repayment terms, and your ability to finance goodwill. These are the primary benefits, as we said. The longer repayment terms equate to a lower monthly payment. SBA lenders have less collateral requirements than conventional banks because SBA lenders are very conscientious of the cash flow. And as long as the cash flow works, you're more than likely to get a loan with an SBA guarantee to purchase your business or buy out your partner. And if you'd like to learn more, we have lots of information on our website called sbaignite.com and a weekly seminar, and you can always post your questions, and there'll be time for questions later on. Thanks, Ami.
Thank you, Lynn. Thank you so much. And we're going to keep moving right along. And I'm going to give you guys a quick talk about using the SBA to refinance your debt, and specifically taking advantage of the benefits in the Relief Act. Briefly about myself, I'm the founder and CEO of MultiFunding LLC. For the last 11 years, we've been helping entrepreneurs achieve their greatest growth potential by coming up with creative and responsible debt solutions to help them grow and expand. I write a regular column for Inc. magazine. I've advised the White House, the Federal Reserve, and the Treasury Department on business credit matters. And if anyone's interested, you can find my book, The Growth Dilemma, on Amazon. Let's dig into two examples of companies and how they're thinking about using SBA loans right now to refinance their debt. One is an employee benefits consulting company that did a big software build and accumulated $3.2 million of short-term debt, primarily in software leases, that's costing them $200,000 a month to service right now. We're working on getting this client a 10-year SBA loan with monthly payments of $35,000. This will be cash flow savings of almost $2 million in the first year. And the result of the new relief bill, the client will save $87,500 in guarantee fees and $27,000 from their first 3 months of payments. Another example is a manufacturing business. This business has been around a long time. It's a stable business. And they currently have a $2 million mortgage on their property, and they're paying $13,757 a month. They also have $1 million in loans against equipment that they've been financing on 5-year notes that they're paying $20,276 a month for. So currently their total month debt service is just over $34,000. Their cash is a little tight as a result of COVID, and they want to refinance both notes into a 25-year SBA loan that will drop their payments to $19,300 a month from $34,000 a month. That's a cash flow savings of $176,000 a year. And in addition, as a result of the new relief bill, because they will not pay any guarantee fees, that's $72,500 in savings, and the government will pay up to $9,000 a month of their first 3 payments, and that is completely forgiven and tax-free. If you have current debt on unreasonable terms and you meet any one of these criteria, and I'm not going to go deeply into them, it is worth looking at using the SBA to refinance your debt and to improve your cash flow. The only situation where it's really difficult to refinance debt is you can't refinance debt to you as the owner. The government's not going to give you a check for yourself. And if you have existing SBA debt, it's very difficult to refinance that. If there's a written, if they can explain that you are going to make your business better and your life better, using you can refinance in the SBA 7A program. What is a good time to refinance? Well, interest rates are low today. You have a good debt to income ratio, and you're able to significantly reduce your monthly payments. Remember, cash flow, in our opinion, is king. And frankly, sometimes the best time to refinance is when you don't need to. The government is creating incentives and stimulus now to encourage you to strengthen your balance sheet and improve your cash flow. Increase your working capital and cash flow and the ability to handle market downturns. Can you imagine we were sitting here last March and you had the option of having monthly debt service of $30,000 or $10,000? I suspect there isn't a single person in the audience who wouldn't have preferred the $10,000 option. Just to reiterate the benefits of refinancing now. If you want to get an SBA 7A loan, which are traditionally 10-year notes, as an example, for a $350,000 loan on the left-hand side, your total savings with the reduction in guarantee fees and the first 3 months of payments are $19,533. If you do a $5 million loan, your monthly savings are over $167,000. Your savings are over $167,000. One example is somebody with $350,000 in debt, credit cards, term debt, credit line, and they're paying $9,000 a month. If they have refinanced into a 10-year 7A loan at 6% interest, they have 3 months of no payments, no guarantee fee, and their monthly payments of $38.86, creating a savings of $19,500 and substantial increase in monthly cash flow to invest and survive during these times. Again, we have a learning platform, SBA Ignite, if you want to learn more about the SBA, where you can go to on-demand learning or weekly seminars to dig in much deeper and to get more than we can share with you in 10 minutes here today. And on that note, I'm going to stop my share, and I'm proud to introduce my friend, John Bly. John will discuss the savings you can capture with the tax retention credits found in the stimulus bill. As regional managing partner for the Carolinas, he heads Aprio's offices in the Charlotte, Greensboro, Winston-Salem, Mount Airy, and Asheboro markets, and I can't wait to get down there one day and visit him. He applies his experience analyzing financial information to advise buyers or sellers in M&A transactions. John, thank you for joining us, and the floor is yours.
Thanks, Ami. We get to the topic that everybody joined for, the employee retention credit. So I appreciate, batting third's always been a key area in the lineup. So thanks for putting me there. The employee retention credit, what is it? Why is it important? Well, I mean, if you think back almost a year ago, I loved Ami's analogy of what's happened in the last year and some of the issues we've seen. And it was really designed, it was created last March at the start. It's been tweaked a lot, and we're going to talk about the revitalized version that just happened. But it is, it's designed to encourage people to retain their employees. So with that, he already gave me a great introduction. I'm not going to talk anymore about myself. Our firm, Aprio, is a top 50 firm focused on middle market companies. And so I think PPP and ERC and the SBA lending is critical. And so appreciate being invited to share some expertise. So the employee retention credit, what is it? So to tell you a little bit about it and why it's so critical, the IRS is even encouraging people. Just 2 weeks ago came out and said they urge employers to take advantage of the newly extended employee retention credit. People are not talking about it enough. There's a lot of talk about PPP. There's a lot of confusion in the marketplace about the employee retention credit. I've even seen already in the Q&A a bunch of questions about the employee retention credit. And what I would say is hopefully we'll answer most of those in these presentation. And if not, if we haven't answered them, if I haven't given the insight, we'll get them in the Q&A section. But even the questions are confusing. People are hearing, they're confusing PPP and ERC, and they're saying, I have to be down in revenue, I have to have this, and that's not really all that true, given the clarifications that's happened over the last couple of months. So why and what happened in the big changes? The biggest thing is that it is a refundable credit for payroll taxes up to $19,000 per employee. So just sort of put that in perspective. If you have 50 employees, that is almost $1 million potential payroll tax credit refundable, not against future income or anything like that. It's a potential big windfall for companies in the US. And the number of employees a company has does not affect whether a company may claim the credit. Very different than the PPP, where there are limitations on number of employees. So what happened between March and December? Originally, this was enacted in the CARES Act in March of 2020. And businesses that received a PPP loan could not qualify for the employee retention credit. So a lot of people totally ignored it. The vast majority of companies that are probably this size that are on this call ignored it. Well, now you can take the employee retention credit. If you were in round 1 or round 2 of PPP, you're now eligible to take the employee retention credit. PPP recipients can file amended returns for the 2020 employee retention credit, employee payroll returns. This is not your income tax return. This is payroll tax. And then also you can claim an ERC on the first 2 quarters of 2021. I will qualify these last 2 bullet points to say that currently in Congress right now is a bill that would even push this out farther. And so right now it's worth up to $19,000 per employee, $5,000 for last year and $14,000 for this year. But there's a bill that's already passed one of the houses and is up for ruling in the Senate, although it doesn't look great to get through on first pass, which would add another 2 quarters to this and another $14,000 per employee potential. So who's an eligible employer? Any private sector business, meaning non-public companies or tax-exempt organizations. This was critical for a lot of nonprofit organizations. This is a really big deal for them. And they had to have had a significant decline in gross receipts during any quarter, and we'll get to what that specifically means, or, and this is the key point, and this is where people get lost, a business that was fully or partially suspended due to orders from the federal or state government limiting commerce, travel, or group meetings due to COVID-19. So significant decline in revenue defined. So a significant decrease in revenue during any quarter. So it's quarter by quarter, year over year. And in 2020, to claim the 2020 employee retention credit and go back and amend, you had to have a 50% decline. Remember, this is one of the 2 qualifiers is revenue decline. 50% decline, same calendar quarter. And I would suggest for people who think their revenue declined significantly enough, it probably was quarter 2. I would start there, look for April to June 2020 versus 2019 and see if you had that. For 2021, it's gross receipts declining by 20% in any calendar quarter in this. So for instance, right now, Q1 2021 versus Q1 2019. Math formula there, figure out whether you qualify. There were some questions about aggregation and group employers. So if you have multiple companies, you have to combine the gross receipts between them. And so you have to focus on quarter by quarter across all entities combined. But this is the part that is really confusing for people, because that's where a lot of people stopped. They said, oh, I didn't have 50% decline, or I don't have enough decline in revenue. But a business that was fully or partially suspended due to orders from governments. So this occurs if an appropriate governmental authority imposes restrictions on the business's operations. So what does this mean? Well, think about what it meant for lots of different industries. It's really easy to picture restaurants, hotels, people who did a lot of business historically through conferences. If you were a big sponsor of conferences, if you were a gym, right? Even today, most gyms are either partially shut down because it's partially suspended. So if you're having to rope off every other piece of equipment, for instance, or if you're in the hotel business and there's significant travel restrictions, think about what's happening in Hawaii as an example, where you have to get a COVID test to get into Hawaii. That's a great example. All of those hotels potentially could qualify. 24/7 grocers, right? If you think about grocery stores, most of them closed in March, April, and May, at least 6, 8, 10 hours a day to do deep cleaning, right? They would potentially qualify as well. It's not just the revenue impact. It's also the impact of what COVID had on you, whether that's suppliers, customers, and even essential businesses count for this. It can be in key functions. So it could be in like recruiting functions. You have to dig deep in this and really think about, where was your business impacted? Was it could you have recruit people? Did you lose people because of COVID? All sorts of issues that could have been the partially suspended. So what orders are included? This includes orders from cities. It includes things like shelter in place, except employees of essential businesses, when lots of cities did that, and order imposing a curfew on residents. So for instance, today and until last week in North Carolina, restaurants and bars had limitations, not just on number of people and occupants, but they also had restrictions on hours they could serve food and drinks, right? That's a great example of another way that they would qualify. And then an order mandating a workplace closure for cleaning and disinfecting, right? So if you had COVID incidents in your business where people actually had COVID, and then you had to close for 2 days, a week, et cetera, to do deep cleaning, that impacts you. So looking at the actual calculations here. So how does it work? Percentage of revenue decline or the COVID impact. In 2020, it's up to 50% revenue decline, and the credit is calculated at 50% in 2020 of up to $10,000 of qualified wages per year. So anybody who had employees in 2020 who had these sorts of impacts, up to $10,000, they could get up to a $5,000 credit by amending their 2020 payroll reports for the year. In 2021, it's a quarter by quarter calculation, and it's up to $7,000 for each of those quarters. And again, just to remind you, in 2021, currently there is something under advisement in Congress that could change that and add Q3 and Q4. So that would even raise the bar even more. So what are qualified wages? That includes the wages you paid plus qualified health plan expenses. So that is things that is the health insurance portion that the employer pays that is not taxed to the employees. The calculation gets complicated. It's certainly worth continuing this discussion, but the calculation gets complicated when you start to look at these other things that layer in. So the work opportunity tax credit, forgiveness of a PPP loan, and the paid sick and family leave credits. You cannot double count the wages. That means that if you got PPP in May of 2020 and you used 8 weeks of payroll and you were out of that by July, those 8 weeks of payroll could not be used again to qualify for the employee retention credit. You would have to use, let's say, July 10th on through the rest of the year as qualified wages. So you just have to pay attention. You've got to go through a lot of fine details on what's paid and when it was paid and where those dollars came from. Last couple things on calculating the credit. So there are differences between over and under 100 employees and over and under 500 employees. So if you have less than 100 employees, all employees' wages are eligible. And FTEs are defined by 30 hours per week or 130 hours per month. So all employees' wages are eligible if you're under 100. If you're over 100, then wages for employees not providing services. So for instance, if you had different classes of staff who maybe weren't able to be as effective while others were, then the ones who were not as effective would be the ones that would qualify. So for instance, maybe some of your traveling salespeople or things like that, where they weren't able to get on planes and go to conferences, they would qualify. For 2021, it's less than 500. So it was less than 100 in 2020. It's less than 500 in 2021. And again, it's the not providing services. And that credit is now $7,000 per employee per quarter instead of $5,000, up to $14,000 for the year. Again, could increase for the next Q3 and Q4. So more to come on that. Maybe the next time Ami invites me back, we'll have a new update on that. For any questions, you can take a snapshot. Feel free to email, but I'll turn it back over to my friend Ami.
Thank you, John. And just keep in mind, we will be sharing a recording of this session with all participants afterwards. And there will be plenty of time for Q&A. And John, thank you so much. Next up, we're moving right along. And much to our amazement, we are on time. Or Bob Simpson and Krista McCabe, or Brinker Simpson. Bob is a managing partner. His expertise is in tax planning and strategies for mid-sized companies and their executive and ownership teams. Kristen is a manager at the firm. She frequently consults and advises clients in income tax planning, financial planning, general business planning, and succession planning. And they're going to share with us everything we need to know about PPP Round 2. Thank you, Bob and Kristen. The floor is yours.
All right, thanks, Ami, and thanks for making us the cleanup hitter, because I think cleanup batters usually end up in the Hall of Fame when the third batters can't do it. So
we're actually all friends, everyone out there in the audience.
Oh, we're all friends. Yeah, we're good friends. So, but thank you, Ami, Lynn, and John, for your insight. It's very helpful. And as they've all said, it's a very confusing time for small businesses, but it's also a very opportunistic time for small businesses, because for the first time in my 40-year career, the government has decided to give us money and not ask for it back and not tax it. And I don't think any of us can say when that happened before, because I know I'm not aware of it. But thanks again. Kristen and I run the COVID team at Brinker Simpson and Company. It's a team we put together a year ago in response to what we thought was going to happen when the CARES Act came out last March, and we were on target. And what we thought was going to happen certainly ballooned from there into PPP2 right now, and maybe even PPP3, depending on who you listen to. But let's go quickly through the slides that we have. We have our little disclaimer in here as well, and we are not offering tax or legal advice, and we ask you to make sure you check with your professional advisors as well to make sure what your particular situation does, because everybody's situation is different. Here's a little bit of an agenda that we have. Going forward, we're going to go through all these very quickly. And we'll just say that PPP, we all know what the acronym means. If we don't, we're too far behind the time to start learning now. But the PPP2 loan came out at the end of 2020 through the CAA, the Consolidated Appropriations Act. And what PPP2 did was just expand on what the first loan did and brought some new eligibility requirements to companies that were really struggling. There was a lot of talk with the first loan that came out about companies that got money that didn't need money and didn't deserve money. But if you go back to the application that was sent last March, the big question on everybody had to answer was, are you facing economic uncertainties in your business? And anybody who ever answered that question no last March certainly answered it wrong. The question comes up again going forward, are you experiencing economic uncertainties in your business? And I would say that even though we're a little bit more defined as to where we are and what we're doing, we certainly have uncertainties going into 2021. So the bill included the reestablishment of the PPP, and it included a second draw loan for borrowers who met certain criteria. These are the changes that came through on that loan. In the original loan, if you recall, any expenses that were used to get a forgivable loan were non-deductible first for tax purposes. The PPP2 came around and allowed the full deduction of those expenses used for the PPP loan, even if the loan is forgiven. And we all know that even after the fact, the federal government came along and relieved all taxation of forgiven PPP loans. States are different. We're in Pennsylvania. Pennsylvania a few weeks ago announced that they would not tax forgiven PPP loans. California is, some other states aren't. So you have to look at your particular state and see what the taxation piece of those forgiven loans are. The expanded the expenses that were eligible for forgiveness in the first PPP program. There was a list of a few expenses that you could use to forgive a portion of that loan. If you recall, and the criteria still stands, is that you needed to use 60% of your PPP money to pay payroll expenses. John talked about that when he was talking about the ERC and the PPP relationship. So at least 60% of your PPP loan needed to pay payroll. The other 40% could be used to pay certain expenses like rent, mortgage payments, interest payments, and things like that. Now, that second 40% piece has been expanded broadly to include supplies, costs of goods, materials, and accounting fees. So the accounting lobby really got a push in there at the end to get some of their fees covered in that. So it's much easier to use the 40% to pay those expenses. And that becomes important when you're trying to maximize your benefit between PPP and ERC. You can get both of them now. You couldn't get them in the prior law. So make sure you're very careful as to what expenses you're going to use when you do forgiveness. The EIDL advance, for anybody who got EIDL, the advance grant, or anybody who got EIDL loans, the advance part of that loan used to reduce the forgiveness on the PPP loan, but that's been waived going forward as well. So those advances do not have to reduce the loan forgiveness. This program opened January 19th. It's got a small window, which we'll talk about, and there are some problems with that window. Who's eligible for this? Okay, first of all, you had to have a first draw PPP loan, and you use that loan for authorized uses, which we talked about, the 60/40. You have to attest to that when you apply for the second loan. You can't employ more than 300 people, and you have to demonstrate at least a 25% reduction in gross income for a quarter of 2020 over a comparable quarter of 2019. Loans under 150 can substantiate that reduction in gross income when they apply for forgiveness. Loans over 150 have to provide support for the reduction in sales in that one quarter. If you had 3 great quarters and you had 1 lousy quarter, that 1 lousy quarter will qualify you for the second PPP loan. Just be very careful with your attestation that you need that money because of economic uncertainties in your business. We have a client who's being audited by SBA on his first PPP loan for about $850,000, and he is being inundated with questions for document support for that first loan. His annual income was up about 10%, but he did have a 25% down quarter. And just to follow up on that, in the middle of his SBA application, he did get the second loan. So while he's being audited and questioned on the first loan, he received the second loan proceeds. But be very careful with that if your loan is going in with support documents. The maximum loan is $2 million, or 250% of your average monthly payroll cost for 2019 or 2020, whatever can get you more money. And if you're got a SIC code of 72, which is hospitality, restaurants, and businesses like that, you can get 350% of your average payroll costs up to $2 million. So it's a 40% increase on what your first loan amount was. You can't go back to the first loan and get more, but you can get more in the second round. Here's a list of the documentation that you're going to need to supply with your application in order to get loan and show that there's a reduction in your sales or revenue or receipts for that one quarter. There's still some argument as to what really constitutes revenue, receipts, or income for a quarter, but there's some in that document will give you a little bit of clarity. We have a loan increase. The second loan came around and they did a couple of changes for the first loan on how you can go back and get more money. If in the first application you did not include, you're an LLC, taxed as a partnership, you did not include any partner comp or partner guaranteed payments, you can go back and get and change your first loan and get additional money for that. And if you had seasonal employees and you used, and you can use alternative measurement dates now to go back and get more money on that first loan. If you made an error, or if the bank made an error on your first PPP loan, you can't correct it through a second application. So you're stuck with that first loan. Talk about forgiveness. Any loans under $150,000, there's an SBA streamlined process with Form 3508S. It's a 2-page application. It's almost automatic forgiveness as long as you check all the boxes right. You sign the attestation and you spent the money in the right place. You are telling the SBA, yes, I spent the money in the right place. You don't have to send any documents in there with that application. However, we're finding that some banks are requiring that you do submit documentation to get the forgiveness. Some of the banks have sold off their PPP program to intermediaries, and those intermediaries may not have your documentation from the first round, so they may be asking for that too. Be cooperative, be consistent, stay in touch with your banker. Make sure your banker is your friend all year long, and that's going to get you an easier process through the forgiveness. Loans under $50,000 are exempt from any full-time equivalent employees and salary reduction requirements that are in the forgiveness package. Loans between 50 and 150 are required to incorporate the calculations, but are not required to submit the documentation for it. remember that you can select a forgiveness period of between 8 and 24 weeks on your forgiveness application. That's where you would have needed to spend that PPP money. We're coming up with some, there's some issues with the forgiveness. We'll just go over Biden threw a couple of changes into the PPP program 2 weeks ago, and those changes are kind of tying up the process a little bit. But right now, between 224 and 39, the SBA will only accept applications for small companies that have less than 20 employees. You can submit your forgiveness application to the bank, but the bank will hold it until the 9th.
This is the
I'm sorry.
round two.
Yeah, round 2 applications. I'm sorry. The round 2 application is the companies under 20 can apply now. Companies that are over that size can't apply until after March 9th. If you don't have your application in, there is a cutoff of March 31st to get your applications in. So the window is getting much smaller. Schedule C filers and any independent contractors or self-employed individuals who file as sole proprietors can up the amount of their second PPP loan to equal gross income, not net income. The first application required you to use net income to do that. The gross income up to $100,000 can be used for a sole proprietor's portion of the PPP loan. You can't go back and change the first application, but the second application can use a higher amount. If you've already applied and you haven't used that amount, remember this just came out a week ago. If you have already applied and you haven't used that amount, we do not know what the process is at this point to go back and either fix that application, or if you can't fix the application, we don't know yet. There are a couple of other changes to that to allow immigrant-owned businesses, non-citizen businesses, and some clients who had defaulted on student loans and things, they'll now allow you to take the second PPP loan. Most important thing here is to maximize your benefit between the PPP program and the ERC program. If you did not claim the ERC in 2020 because you are a loan recipient, you can now go back and file a claim. You have to analyze, as John said, to make sure you use the credit to the extent you're eligible before receiving your PPP forgiveness. There is no rush to get your forgiveness in, except in certain circumstances. And we'll tell you about a client that we have right now whose loan came up in, used his 8-week period from last April to last June to get his PPP forgiveness period. It was very important that he got it done in 8 weeks. Well, if you do the math, the forgiveness period ends 10 months after the end of your forgiveness calculation week. His forgiveness period comes up in March. His bank has shut down forgiveness applications at this point, so he's up against it to get his forgiveness done. The bank actually sent him loan documents so that he can sign on to pay his SBA 1% 5-year loan, which he's furious about. So there's still a lot of changes, a lot of things that have to happen with dates.
Yeah.
Consider increasing your payroll cost forgiveness application to maximize wages eligible for both programs. There's still a lot of items that aren't clear as far as the PPP number 2 is. We do think that the March 31st deadline will be pushed forward. We know there's a lot of push from the AICPA and some other organizations to move that deadline forward. It's an artificial deadline at this point. Companies that are struggling should have enough time to make sure that they get their second application in and they get their forgiveness done at the same time. Here are some cautions that we have. We talked about the deadline. It's coming up on March 31st. Banks can establish their own cutoff. Bank of America has established March 9th as the cutoff of their second loan application. Forgiveness, we just talked about the 8-week period. Make sure you know when your forgiveness 10 months period ends, because if you're not forgiven by then, it could turn into a payback loan. So be very careful on that. The SBA has had some problems as well. They've rejected applications indicating that the owner is a felon. They've rejected applications because they aren't recognizing EIN numbers even when they're genuine, and they're asking you for your IRS letter that gives you the EIN number. If you've been in business for 25 years, I'll bet you don't have that letter. The AICPA, which is our governing body, has gone in and has really asked for guidance in resolving some of these issues. The SBA will not forgive if you had an error on your first PPP loan and you got too much money. They will not forgive that excess. You'll have to pay that back as a SBA loan. It could be a major issue for borrowers who applied early on these. So those are the cautions that we're worried about. We have a board here for questions. We have a website set up that just deals with it. If you have questions, please, if you're not able to ask and answer today, please send them to us and we're good to go. Thank you guys again, and on to the questions.
Hopefully we were 10 minutes.
Yeah, we were longer, but we were
We were?
A
close.
little bit longer, but that's okay. We still
You need
love
a
it.
gong. We need to get the gong.
Well, I don't want to do that.
All right.
Appreciate everyone. I appreciate everyone for their speaking and their insights. And now we are going to, if Kristen, you don't mind stopping your screen share so I can put up the other screen. And now we're going to turn the floor over to the panelists for the moderators who are help us with Q&A. Please put your questions in the Q&A section. If you can, it would be helpful to us if you could share with us your who you're trying to point the question to. That'd be great. Otherwise, we'll figure it out as we go. So Hannah and Megan, we're going to turn the floor over to you.
Thank you, Ami. PPP-1 could reduce pay by 25%. I was forgiven PPP-1 already and have accepted PPP-2. May I reduce another 25% without penalty?
The 25% is on a per employee basis compared to a base period of the first quarter of 2020. So if it's that employee, if you already have the reduction, I think you should be okay. As far as we know at this point, it's still the same base period. So you may just have that same reduction again. If it wasn't more than 25%, you should be okay.
How does affiliate subsidiary rules apply if one subsidiary is eligible for retention credits, but others and holding companies does not? The holding company is an ESOP.
Yeah, so the way the employee retention credit works is you have to have affiliated groups looked at as a whole. So both that applies to employee count, that applies to whether they were full or partially disrupted by, and it applies to the revenue decline, and you have to combine. So it really depends on the specific situation, but if the whole thing doesn't qualify, it doesn't qualify at all. It has to be all or one or nothing, and that's not necessarily that challenging to get it to qualify. It's probably less about the revenue and more about the impact from COVID.
Just briefly, folks, we're going to, the moderators are going to put the Q&A a Google form. And if you want to get any of our newsletters or follow-up information from any of us, our organizations, you can simply click on that Google form and it'll be there. So let's go on. Just want to let everyone know that.
Thank you,
I
Ami.
hear this one.
Are we following?
I heard if one had their EIDL advance deducted from their PPP-1 forgiveness, and now that would be reversed and the EIDL deduction amount would be forgiven. Is that true? And if so, how do we have this happen?
Yes, that is true. And the SBA is supposed to automatically remit that to the lender, and then the lender is required to work that out with the borrower. If you have a loan, they are required to re-amortize and give you new payments. If you do not have a loan beyond the EIDL that was not forgiven, they're required to let you know that you're paid off and you are not required to make any more payments. I would connect with your lender if you haven't heard anything yet.
For SBA loans, is non-availability of loans from other sources a prerequisite? We have a line of credit with BOA and good credit history. Would that stop us from getting an SBA loan?
We're gonna answer 71.
Yeah.
That depends on what type of SBA loan. You can have a conventional line of credit. An SBA in general is long-term capital and not revolving credit. So oftentimes there's an SBA loan that comes behind the receivables and inventory that secure the revolving line of credit. As far as being turned down by a bank, you don't have to go shopping around from bank to bank, but the bank that you work with has to be unwilling or unable to give you the term loan that you want on reasonable terms. And if they say that they're unable to, they are allowed to use an SBA loan.
What underwriting valuation formula or guidelines does the SBA use to calculate max loan amounts to buy a business? Any rules of thumb to consider before heading down that long path and avoid learning at the end of the funding is insufficient to meet the seller's preceded expectations?
Whenever you're doing a business acquisition loan, there has to be a business valuation that's completed. In general, when you go to get a business acquisition loan, you need a business appraisal, just like you would if you were buying a piece of real estate. If you're dealing with a delegated lender, they can approve the loan conditioned upon the business valuation coming in at X. If you are going with a non-delegated loan, you have to acquire the business valuation before that lender can submit it to the SBA to determine whether it's enough. But as far as, whether or not you're qualified, one of the things that you could do is work with us at MultiFunding, and we can look at your situation and determine whether or not we have a lender that would be interested in assisting you in your particular situation.
I think I'll just add one thing about SBA lending is that sometimes people make the mistake of going, either their current SBA lender doesn't tell them about SBA, or they walk into a branch or something and somebody doesn't know what they're talking about, tells them that they're not qualified. There are 2,200 SBA lenders around the country, even though there are really about 100 who know what the hell they're doing. And every one of them uses the program a little differently. So don't just assume if one person tells you something that's the answer, because often case it's not.
Concerning the 7A for purchasing a business, are there any other closing costs or fees other than the guarantee fee? Also, do you need to use the bank money, or does the SBA lend the entire amount?
When you are using an SBA program to acquire a business, the total financing package is based on everything that it costs you as the business owner to begin your business. So all of the closing costs can be included in the purchase price of the business. And then the down payment is against the total project cost, including all the fees. So you would have to pay 10% of them, as well as the cost of the business. And then each bank, I will say this, the SBA has all their fees waived. Each bank has a different amount of money that they charge for out-of-pocket expenses. You still need to pay for appraisals, environmentals if required. The business valuation itself costs money, but all of these costs can be incorporated into the loan amount. And then you, as the person purchasing the business, will have to come up with the required down payment on that portion as well.
Does SBA program where you can refi existing bank debt at possibly lower rates and longer term? They have a program.
Yes.
I was under the impression that SBA would pay off the first 6 months of P&I for new loans. Is that incorrect?
It was at first. They changed it to 3 because of budgetary constraints. We're hoping they'll put more money against it, but there's no sign of that right now. So you were right 6 weeks ago, but not today.
Does the 7A loan require a personal guarantee?
Absolutely. All
Anyone?
7A loans require 20% or more owners to personally guarantee the loan. Whether or not those guarantees are secured by person or real estate depends on the amount of the loan and the business collateral that's available for each loan.
All right, ERC. For 2021, if our business didn't experience any decline in the business for refundable tax credit against the employer share of the Social Security tax equal to 70% of the qualified wages they paid to the employees after 12/31/2020 through June 30th, 2020. Suspension of the operation of our business by the state government back in April 2020 make us qualified for the employee retention credit?
Yeah, so as it relates to the timing has to be during that quarter. If it's not for the reduction of revenue, you had to have had an impact in that quarter. So it has to be, that law that happened in that city in April of 2020 has to still be in effect or partially in effect at this point. So, my restaurant example being one to hopefully help you, they were totally closed in April in almost every city in the country. Today, they're still partially closed in almost every part of the country. They're, either outdoor dining only, or closed at a certain hour, or only allowed to serve drinks till a certain time, or limited number of people and guests in. That would all make that specific example still qualified under a government order that was made, 10 months ago.
How would this be if you're starting a new business in a rental property? Can you get a loan from the SBA for this startup?
Yes, you can get a loan from the SBA to start a business as well as purchase a business. And these rules where there's no fees and they pay the first 3 months, that's also eligible for starting up a business. And if you want to start in a place that's in lease space, you just need to get a lease for at least the terms of the loan.
Sorry, Lynn, I think I heard that question a little different to you. I think what I heard is they're asking, could you use an SBA loan to purchase a rental property like an Airbnb and something? And the answer to that, if that's what you're thinking, the answer is no. For real estate, for an SBA loan, it has to be for owner-occupied real estate that you actually run and operate at least 51% of your business out of.
If you have excess PPP during the forgiveness period, can you use the excess for ERC even if it falls within the 24-week period? We have already achieved forgiveness of the first draw PPP loan.
So if your PPP was for less, and so let's say in that 24-week period that only covered 12 weeks or 13 or 14 weeks of payroll, then yes, the remaining 10 weeks of 2020 in that example would potentially qualify for the employee retention credit.
How do we get ERTC for last year, March 13th onwards, now that having PPP does not stop ERTC? 941 has already been filed and taxes paid for those quarters.
So you have to run through the calculations, make sure you qualify, and then you file form 941X for amended payroll reports for the quarters that you qualified for and that you're looking for refunds.
A company has contacted us to help with the ERC. They charge about 30% of the credit. Is this complicated enough to hire someone to take advantage of this?
The credit, I think the credit's fairly complicated. It's not very complicated if you have less than 10 employees and you didn't go for PPP. I think it's pretty easy if those under that scenario, and if you're in one of the industries that's been closed the whole time. Anything else, I think you heard Bob from Brinker Simpson talk about one of his clients that's currently being audited for PPP on documentation requirements. And that's really the risk here is what is in his case, he was talking about PPP loan needs. In this other case, as it relates to employee retention credits, you really need to document the impact of COVID on the business and what were the shutdowns, what were the laws, what was the thing that required you and how long did it last, what was the date of those laws, and sort of that documentation to make sure that you're covering yourself when or if the government comes knocking. The calculations themselves, if you did have PPP or if you had any of the payroll family leave credits, make it really complicated quickly because you have to go almost employee by employee and week by week to figure out when you qualified, when the employee was sick and got that credit, because you can't double up on these credits and you can only use the wages once for each of these different scenarios.
If you haven't submitted 2020 tax returns, do you have to wait to take the tax credit under ERC?
No, under ERC, it's really the payroll tax credit. So it's not your company or individual tax returns. So that isn't something that matters. You can always go back and amend the payroll tax credits for 2020.
We filed amended returns for 2020 to claim ERTC retroactively. How long does it take the IRS to issue a refund?
That's a good question. It's unclear right now how long it's taking them. They're still opening mail from last March. and I don't mean that sort of in a funny way. I'm sure I just saw Bob sort of laugh because I think they're probably seeing it too. But we're getting letters on responses from last March. The feds are way behind. They have said they're going to make this a strategic priority to get the money back in the taxpayers' hands as soon as possible. Our best guess is 4 to 8 weeks, but it is a guesstimate at this point.
Can you apply for this if you have had your employees on work share?
I assume work share means like a PEO, that's what I assume that means. And so assuming that's the case, then yes, absolutely. We've had clients who do that.
If you get PPP in round 1 and round 2, do you qualify for the tax credit?
Yes, you would still potentially qualify for the employee retention credit. You just have to be really careful as to which dollars were used when, and make sure that you can't use the same wages that you got forgiven in PPP for wages for the employer retention tax credit. So it'd have to be different wages, meaning maybe in the example earlier, you used up all the PPP in 10 weeks of payroll and you use some of it for rent and other expenses, then the rest of the payroll for that quarter and for that year would qualify.
What if your company is pre-revenue?
I'm not sure if that's for employee retention or.
I think so. It's in your time slot.
Okay. If it's pre-revenue, that would still and still had an impact, and you had W-2 employees, and you were impacted by COVID under the government shutdowns, then yes, certainly would still qualify, and you could get some of those refunds.
Are quarters defined as January, February, March, or 3 concurrent months?
It is defined as a calendar quarter. So it is January, February, March, April, May, June, July through September. So it is the calendar quarters.
I've read to qualify to begin the retention credit in Q1 2021, you could compare Q4 2020 to Q4 2019. And if the decline is less than 20%, you qualify beginning Q1 2021. Is that correct?
It's not. You have to qualify calendar year versus calendar year. That part's correct. The qualifying, Q4 2020 versus Q4 2019, that part's correct. But that would qualify you to begin to take the employee retention credit in 2020. I think the question asked if you could begin to take it in 2021. You could, if your 2020 calendar quarter was behind, you could actually go back into 2020 and get those dollars.
How is the $19K per employee amount determined? And how can we calculate value per employee on our actual payroll during this time?
Bob, I think you're on, I think you're off mute. I can hear a little.
I muted him.
Okay. So the $19,000 per employee amount is $5,000 potentially per year for 2020. And it's $7,000 per quarter potentially for Q1 and $7,000 per employee in Q2 2021. And it's calculated based on payroll of up to $10,000 for the year in 2020 per person and up to $10,000 per employee per quarter in 2021.
Are the new SBA regs implemented for sole props and small businesses under 20 employees ready? For example, using line 7 on Schedule C. Should I apply now or wait?
Definitely wait. They're not, as far as we know, as of yesterday, still not available, and no form is available, no further guidance.
Is ERC available for a new business that started operations in July of 2020? There are no prior numbers to compare to reduction of revenue.
If they have employees and they had potential COVID impact for shutdown, then yes, it's not necessarily just a revenue decline.
Our lender submitted our PPP-1 forgiveness app to the SBA on 11/23/2020. We still have not received any determination back from the SBA. Should we be worried about the delay? Any actions we or our lender should take at this point?
60 days.
You should contact your lender and make sure that you're on top of it, because there is a 60-day window for them to come back to you, and I think you've expired. You've exceeded that 60 days.
300 employees criteria for ERC eligibility has been removed, correct?
Correct.
ERC, can you confirm that from 2019 to 2020, there was a 50% decrease in revenue or full or partial closure.
Confirmed. That is correct.
We are a food manufacturer. Our business remained open as essential, but our food service customers in New York City were first to close and remain restricted. We do not meet the revenue reduction target. Are we eligible for the ERC?
At a surface level, you definitely have an option to qualify based on the fact that your customers were shut down. You'd have to get into a few more details as to exactly the impact and how they were shut down and for how long and were they shut down by government orders, which in New York City, I know there was a lot of government orders, but certainly based on just that 2 sentences, I would say that it's highly likely you qualify.
Employees count has to be done taking all affiliate companies across the globe to it just for the companies in the US.
Yeah, so it's just the US employees.
What is considered a health plan? Just medical, dental, vision, STD, LTD, only paid by the company amounts as deducted from the EE amounts are included in their gross anyway.
They haven't actually ultimately defined what else is in that. I do not believe the short-term disability and long-term disability are going to be included, but the health and vision will be included.
So if you received a PPP loan, are you not eligible for this tax credit?
That's incorrect. You are eligible. Originally in March of 2020, you were not eligible, but with the changes in the law in December of 2020, you are eligible.
Are you able to refile how you classified your forgiveness for PPP round 1? We claimed 100% payroll for loan forgiveness when we could have claimed the 60/40 payroll other expenses.
You're not able to do that.
Not able to do that.
Yeah.
I will say that we think it's possible because of how bad the ERC is screwing things up. Bob's dead on. It's currently not available, but with all the changes that continue to come out, it's, I wouldn't rule it out in the next 6 months, but it's not possible today.
And you may be able to use, if you included in your payroll costs health insurance, you're going to carve that out. It says it last night in the guidance that came out. You could take the qualified health insurance and those things away from the wages. I'm still not 100% clear, but if you used more than you needed, if your loan was $200,000 and you listed $300,000, I think you're okay using only the $200,000. And if you had, at this point, I think they're going to have to change that, but right now that would be your only option.
Is credit of $5,000 per employee per year or per quarter, which is impacted?
It was $5,000 per year for 2020 per employee for 2020. And it's $7,000 per quarter per employee in 2021.
We have a rental company that rents both equipment and event items. Our event side was shut down due to state restrictions on gatherings, but our equipment side was up in revenue due to everyone staying at home and doing projects. Would we still qualify? We only saw an overall revenue drop of 7%.
Yeah, so the event side being shut down is more than a nominal portion. Assuming the event side is more than, a few percentage points of your overall revenue, then yes, I mean, because they say it has to be more than a nominal portion of your business being affected. And so I would say that, assuming that's at least 10, 15% of your business, then yes.
Would an SBA loan work for starting a new business or just if you're buying an existing business?
You can use an SBA loan to start a new business with all the same bells and whistles right now, yes. You do need to have 10% of the total project cost, the same as you do for buying a new business. But yes, startups are definitely eligible for SBA financing.
Is it correct that if you are eligible for ERC in one quarter, you could automatically be eligible to include the next quarter too, regardless of revenue versus prior year? My accountant advised this.
Depends. So if you were qualifying based on the revenue decline, then yes, you only had to have one quarter that qualified. So yes, if you're qualifying based on a government shutdown, then the government shutdown still has to be in effect in the quarter you're qualifying for.
Can the tax credits from the ERC roll over to future years if they save larger than your tax liability?
They don't roll over. Instead, they're actually refundable. So they will actually pay you back rather than them rolling over.
Can you apply for PPP if you acquired a business in August 2020 for round 1 and 2?
If you did a stock sale, it's definitely going to be a lot easier. There may be a way to do it if you did an asset sale, but you're not going to have any payroll information to base it on. So it's unlikely. Really probably going to work with the lenders. There's more guidance on the forgiveness part than there is on the new applications for that. So if it's a stock sale, yes. If not, probably not.
I'm not seeing any information regarding a new round of EIDL. Am I missing something?
So there's a new EIDL advance out, but it's very limited to, there's a revenue reduction test of 30%. You have to be in a low income area and a minority business. But the EIDL loans, I think, are still available. What's that?
You can still get an EIDL if you didn't get it last time. They've extended it through the end of 2021, but it is our understanding that the cap with them is still $150,000. And if you didn't get the whole amount last time and you want to apply for an additional amount, there's a process and a procedure to do that. If you email us, we can share that with you, but that's all directly with the government. You do not go to a lender for that.
Regarding tax credit, can we apply this to 2020 even if we ended up terminating employees at the end of the year? I own a catering company. Would this be a question for our CPA? Thanks.
So if it has to be, the employees had to be employed during the time you're taking the tax credit. So, you know, for Q3, for instance, they were still employed. And if you weren't paying them through PPP funds specific, then they would qualify as part of that $5,000.
Do you know what the new formula is for small business PPP loans that is open for 2 weeks ending March 9th?
No.
No.
We don't, and it's not small businesses. It's actually only sole proprietors. So it's not a small business with employees. That formula is only changing for sole proprietors, not that don't have payroll. The exclusivity period through March 9th is for businesses with less than 20 employees.
Our firm received PPP2. We believe we will qualify for ERC as well. Do you recommend working with a third-party CPA firm to prepare the ERC and PPP1 forgiveness since they go hand in hand? And how does the credit show up?
The credit, I'll answer the second part first. The credit shows up as a payroll tax, either credit or refund. You know, for 2020, it would show up as a refund since you've already filed. For 2021, it could show up as a credit directly against the wages that you're paying every single week. So it would end up in cash in your bank account because you wouldn't be paying payroll taxes. As far as working with somebody, you know, that's more of a personal decision. I would say that if you have PPP1, PPP2, and potential employee retention credit, the math gets complicated really quick, and the dollars, you know, especially if you have 10 employees, let's say at a potential of 19,000 per employee for credit, you're talking $190,000. To me, it would be, you know, advised to talk to a professional, you know, and get some advice, because the thing gets complicated quick, and that's real dollars. It's not like we're talking about a couple $1,000s.
With PPP money, a company cannot pay rent to related party trusts except to the amount of interest, if any, the related party entity pays on its debt for the property. As part of the lease agreement, the company pays the city or town directly for real estate taxes on the trust property. Are the real estate taxes payable with the PPP that the company received?
Interesting. All right. No, just the interest portion is deductible on related party rentals.
For the PPP loan, if a company had a choice of using these funds to pay for 100% of payroll versus, say, 60% for payroll and 40% of other eligible expenses, is it better or easier to be forgiven if we use the funds to pay 100% of payroll?
Again, if you don't qualify for the employee retention credit, you can use 100% of payroll for forgiveness purposes, but you got to do the ERC computation first to show you how to get the maximum benefit of both that credit and the PPP loan.
How does working owner's salary get calculated for this round? Is it based on history or actually salary 2021 during PPP?
It's your 2019 Schedule C income, depending, or your wages if you were an S corp, or your K1 if you were a partner in a partnership. It's still the same formula and still the base period of reference. There's limits on the owner compensation to $20,833 based on your self-employment earnings or wages if you're an S corp from 2019.
Can you please clarify eligibility for the ERTC for multi-unit restaurant operators if we have 500 plus FTEs that were providing services?
So if you had the COVID impact, meaning you were limited in, capacity, then that would all qualify, all 500 plus. If you had some restaurants that were fully capable, then you would have different issues, right? You'd have to break out those employees that didn't have the impact.
If your US-based company is 100% subsidiary of an overseas publicly listed company, are you still eligible?
I don't know if that's for PPP or ERC. I would say for ERC, it's if it's 100% subsidiary of a public company, then you are not eligible.
If you're saying it's a foreign stock exchange, that's a really good question that I've not heard yet. And I think you would still obviously have to meet the attestation and that you needed the loan, which they're being really pretty strict about now. But you might, as long as it's not Hong Kong or China, there's definitely a potential for eligibility. You could reach out to us with more information or talk to your lender about that. I'm not positive about that. Yeah.
If your US-based company is 100% I am still confused about the FTE in regards to staff that decided not to return during the covered PPP period and what to do.
So there were changes made in the PPP loan for employees that voluntarily left your employment and didn't return, whether or not you had to restore the headcount. And what those changes was that if they left voluntarily, you could take them out of the numerator and the denominator of the headcount. That computation still sits for PPP2. PPP2 hasn't changed the criteria or the computation in that regard.
I have been stuck in D80 for weeks on my PPP2. There was an EIN number question. I have provided returns, 147C, EFT, PS's docs. I'm stuck, not moving forward. My company has under 20 employees. Any suggestions? I can't hear you, Kristen, even though it looks like you're unmuted. Ami, can you try to unmute them?
I'm sorry, guys. Unmute who?
It looks like she's unmuted, but we can't hear her. There we go. Try again, maybe.
Oh, you're unmuted. Who are we talking, Lynn?
No, Kristen, we can't hear Brinker, Bob.
Can you hear you guys now?
Maybe continue down to some of the other questions.
Okay.
Yeah, wait for them. Maybe Brinker Simpson, if you guys want to log out and log back in, maybe that'll be helpful. We'll just keep moving.
PPP. We will be sharing a recording after this with the slides. For the ERC, what if I did lay off some employees while closed, but then rehired them a month or two later? If I rehired them or after my PPP loan time period was finished?
Yeah, so that the wages that you paid while they were employed with you that weren't covered by PPP would qualify.
Hello.
Okay, we can hear you now.
All right.
So for the stuck question.
Okay, so That's the EIN mismatch is a major issue that the SBA, they changed their software from the original one to the new one. And one of the major issues that they're seeing is they're getting EIN is wrong error messages, and no one knows how to fix it. I was able to get past this error with 2 different banks, but one I am still stuck. So if you were to reach out to us and let us know which lender, you might be able to get through it. Apparently the new guidance is they're overriding that. If you can give them a copy of your EIN, if you have that, like your EIN form that you have that can confirm it. TD, I know, is making you bring it into the branch, and then that will override the error message. But it's a really unfortunate delay.
We applied for and received the second round of PPP and plan to use it in our current needs of salaried employees, myself, the owner, and the main salesperson. This is way less than last year's FTE. Is there any issues with that?
Yes, they're going to have issues because you're basing your loan on payroll that you're not going to resupport. So you'll have some forgiveness and then some loan will have to be repaid.
As seasonal employer, can I still apply to amend PPP 1 calculation if I've already applied for forgiveness?
You cannot, no. If you've already applied for forgiveness, there's no relief. If it was recent and the lender has not submitted their, I think it's form 15 something, then you might be able to, but if you already had a decision and it's been submitted to the SBA, no.
We use ADP as a PEO, so technically our employees are employed by ADP. We were able to get around this for PPP, but how do we apply for relief on the employee retention credit? Thank you.
Yep. So the employee retention credit, you need to submit the calculations to ADP and let them know that you qualify and what those calculations are for your payroll tax credit, and they will refund it to you. For 2020, they'll work on, they probably won't do it as fast as if you were not a PEO, just to make that clear. They're going to probably package, once a month with all of the people that are on that shared employer plan and amend their return to get the refunds, and then they'll allocate you those dollars, similar for going forward into 2021. But it's not an issue. We've had clients apply in their PEOs and have not had problems.
To confirm, the second PPP draw, you can use 24 weeks, correct?
You can use any covered period between 8 and 24 weeks, but you will have to prorate the $100,000 limitation based on the period that you choose.
US Bank closed forgiveness portal right in the middle of uploading my docs, 10 months from funding date. Loan was less than $50K.
So the 10 months is actually 10 months from the end of your covered period. So if you chose an 8-week period, it's 10 months from the end of that 8 weeks. If you choose a 24-week period, it's 10 months from the end of that 24-week period. So you're probably okay on the deadline. But for the under 50, you don't have to meet FTE attestations or salary reductions. So whenever they reopen that, it's very, very simple, 2 attestations, and you should be good. It should be very, very simple.
Would you suggest having our payroll service handled by the ERC, or should we go through the accountant?
I mean, at least our experience has been the payroll companies generally aren't really doing the calculations. So they're part of maybe the payroll filing of the amended returns potentially if your accountant's not doing it. But what we're seeing is that they're not actually doing the full calculations. And so to the extent you had PPP, for instance, they don't have any of that data on your PPP loan and how to make sure they maximize the credit. So I'd suggest if you're gonna hire somebody, I'd suggest using your accountant, because I think they have a lot more data on you, and they're doing this calculation for clients.
We sell tech equipment for conference rooms and churches, both disrupted by COVID. Do we qualify for the ERC?
Again, there's a lot more that probably goes into it, but based on the disruption and the shutdown, if one of your primary customers is churches and they were closed by a government mandate, then you should qualify.
Can the owner of an S Corp that did not draw W-2 wages in 2019 add themselves to payroll during the PPP covered period to draw a paycheck that will be forgiven?
No, owners are limited to the payroll, to the compensation that they had in 2019. And for an S Corp, that would be their wages. With Schedule C, it would be their net Schedule C earnings. A partner, it would be on their K1.
For receiving the 2020 ERTC, do all dates in 2020 count or only post March 1st, 2020?
Yeah, only the post March, and it's not March 1st, it's like March 20th, but yes, they only those payroll, only that potential payroll. And again, only the payroll that wasn't qualified under PPP qualifies for the retention credit.
Should one want to filing for forgiveness on PPP1 to see if more is coming forward?
I think you want to file forgiveness on PPP1 if you're getting up to the limit, and if you don't qualify for the ERC, I don't know if it makes the process any easier the second time around, but I would use those two criteria before you file.
John, we were shut down for a couple of days by state order and then deemed essential. Also, we had to continue to have a horrible time recruiting new team members due to COVID. Can we apply? Can we qualify for the payroll tax credit?
So in 2020, if under 100 employees, it certainly gets easier because then you don't have to go employee by employee for who was deemed, essential, and where you just were, or they all, because potentially they all qualify. If there's certain areas of your business that had an impact, it sounds like retention and hiring was one of them, but there might be other areas that were impacted by a government shutdown. For instance, some of your clients may have been shut down, some of your vendors, supply chain issues, things like that, then you still could potentially qualify even though you were deemed essential.
I applied through Chase for PPP2 on January 15th, 21, and have not heard anything. I called Chase with no answer. What am I to do?
Well, you want to keep calling Chase, that's for sure, because it's that sounds like a long time, but there are tremendous delays right now with all of the changes being made and bank approvals. So you just have to be consistent and be patient.
I own an aerial advertising company and we were unable to display ads because spectators are not allowed to attend outdoor sporting events and beaches were closed early part of the summer. Does this by itself make us eligible for the ERC?
It's pretty close. It's probably the closest I've seen on here for 100% certainty without more information. I know I continue to say you just got to have a little bit more context for it, but if you couldn't deliver your goods and service because the clients weren't allowed to go to the thing, then it sounds a lot like that would qualify as a COVID impact because all of those businesses were shut down by mandates of the governments.
Is there a specific time period for the ERC 100 FTE employees threshold? Our company hovers slightly above or below 100 on a monthly basis.
So it is quarter by quarter on the calculation. So it'd be an average for that quarter.
If your first PPP loan is taking longer for the bank to apply the forgiveness past the 10-month date, can you still be forgiven if your application is in before 10-month date ends?
Go ahead.
All right, so if your PPP round 2 has been completed, but I'm confused a little bit about this. So which is delayed? I'm not sure.
That's a different page. You raised the question.
Okay, can you repeat the question?
If the bank has your application and it hasn't been forgiven yet and you're at your 10 months.
Correct. If your
Well,
first
I
PPP
don't
loan,
think it converts to a loan then. The 10 months is just to submit it.
Yeah.
That your deadline is the 10 months and then the bank has 90 days to get it to the SBA and then the SBA has 60 to get it back.
Right.
So, yeah.
If you have your application and you're waiting for the bank and the SBA to approve that application, you're still within the time frame.
Yeah. You've met your rule, yeah, to be okay, so.
We're on this one. So.
If you're PPP. Should we do the next one?
Yeah, let's
I
keep
applied
moving.
for PPP round 2. All have been completed on the website and tax forms. I'm worried about this delay. All forms were uploaded at the same time. I've heard that it's been accepted. Thought that we were to hear about funding last week.
Yeah, so they've been extremely delayed and if you have less than 10 employees, I know or less than 20, hopefully you're not delayed because of the new change, but a lot of the ones that I've seen have been 4 to 6 weeks for the money to actually come to the account. And almost everyone, they're coming back and asking for more information. So I would just try to reach out to your lender and get through to them.
We are a small business with less than 10 employees, so we applied on January 11th. We still have not received our loan, and we contacted the SBA and were told that a loan number was issued and gave us info to log in to eTran. We can see the loan was approved on January 22nd, shows unfunded. We contacted the financial institution to ask why they haven't funded us, and we can't get a reply back. What resources do we have to ensure that our loan gets funded?
Is that,
We'll answer it from the PPP standpoint. And I'm not sure, I would defer to Ami and Lynn if they know any more on this than we do. Because I'm not sure what recourse you have.
yeah, that's a lot.
Is this a PPP loan or is this a regular SBA loan?
Probably PPP.
Mhm.
I mean, when
Second loan.
the lender gets the loan number, typically it's very quick. That's kind of, I would be alarmed by that wait if there's a loan number issued. That's a problem.
Yeah, I would definitely push hard at that lender to ask them what's going on.
Yeah.
Go to the office, find out who's doing it and who's holding it up.
In the first round, there was a 10-day requirement.
Exactly. And I think this one is still something, but they gave them a little bit more. Yeah, that's a long time. That's not good. I worry almost about fraud, that somebody might have applied before you and it went somewhere else. That's a long time.
Something doesn't sound right.
Yeah.
PPP 2, first loan for under 150K, 90% reduction of sales due to restrictions. 9 FTEs, 100 seasonal in 2019. Some may work just one job, students. Still no business, so just 2 employees, but we can't bring back the 9 full-time employees. No work, but anticipated work. May through summer, we are an event company. We will be able to meet the 60% after 24 weeks. So can we bring in employees as we get busier, i.e. phase them in and still get forgiven based on meeting all other criteria?
Yeah.
I would think you can do that as long as you meet the criteria for forgiveness. There's a lot of data in this question that you'd have to sit down and peel apart. And I think you should sit down with your accountant and make sure he has all that information.
I qualify for ERC, but I count employees from my parent organizations as well. We have more than 500 employees. Do I qualify for ERC with my unit particularly?
So if it's a related company and it's a parent subsidiary, then you have to look at, do you qualify across everybody, right? And so there has to be an impact, a COVID impact, or a decline in revenue. It's not unit by unit, it's at the whole. They combine all business units into one, and they look at it as one common employer.
PPP 1 loan applied for and waiting on 100% forgiveness. Considering PPP 2, since business is still impacted, substantial sales declined in 2020 and anticipated in 2021. But through OPEX management and reduction, built cash balances and did not need to use the LLC facility in 2H. Does access to the line of credit and cash in bank signal that should not apply for PPP 2?
That's a great question because it goes to the attestation as to whether or not this money was required for you to sustain your business. Depending on the loan amount, I would think that you'd have to just look at it very closely and you got to make an internal decision as to whether or not you should take the money.
We have 35 full-time warehouse employees through a staffing company, where our employees are technically the staffing company's employees. How do we claim the EMP retention credit if these employees are not on our company's name?
So that's an interesting one, because if it's different than a PEO and they're not your employees, then, and you don't have shared employee responsibility, like a PEO, and they're truly a staffing company, then you're outsourcing payroll. And so they're not your employees, and then you would not qualify. The actual staffing company would qualify potentially.
Yeah, John, we have this situation exactly that we talked about, and it is the staffing company that gets the credits, not the company they contract with.
For a PPP2 loan, do you need to prove that you were in operation February 15th, 2020? If you're an LLC that has elected to be taxed as a C Corp, only had employees that were also owners, and you were in operation but did not pay these owners in Q1 2020, Q1 2020 Form 941 shows 0 employees and 0 payroll and would not pass the in-operation validation. What other documentations could show that you were in operation?
2019. So I'm not sure if you started in 2020, but if you were in business in 2019, you would use the 2019 C Corp owner payroll, and that would be what they would be eligible to be forgiven for, $20,833 per owner in the C Corp. Otherwise, probably not eligible.
Can you use a 1099 NEC?
This is a PPP loan question. The answer is yes. You'd be treated as a sole proprietor.
What documentation does an S Corp with 1 individual and no official payroll who files taxes as pass-through use to obtain a PPP loan, or is it not available to this type of business?
And without payroll, and if the owner of the S Corp is not on the payroll, then you're not eligible for PPP.
Is there a special program for women-owned business grants? It shows on the SBA website, but there's no link to inquire further.
If you're talking about 7A lending, there's nothing specific for a 7A loan for a women-owned business, although SBA is very interested in it. You can become a certified women business owner, a WBE, and I think that certification is on the Commerce website, if I'm not mistaken. But you can get an SBA loan if you are a woman, but there's nothing specific for a women-owned business for a 7A loan.
ERC question. Say that 100% payroll was used for PPP forgiveness over a 24-week period, but at the beginning of the covered period, the company is eligible for ERC. Can you say that the wages were used for PPP forgiveness were only the wages paid at the end of the 24-week covered period, and use the wages paid at the beginning to apply for the ERC as to not overlap each other?
Yeah, I think Kristen commented on this similarly earlier, and my assumption is when you originally, unless you laid off a bunch of people, when you applied originally for a PPP loan, it essentially covered 2.5 months. And so let's say it covered 10 weeks, 11 weeks, 12 weeks, something like that. You may have put that you had, in her example, 300,000 of payroll during that 24-week covered period, but only 200,000 was really needed for the PPP loan. That extra 100,000 could potentially be used for the ERC credit in that specific example she gave earlier.
How do we get started on figuring out our ERC? Should we go through our payroll company?
So going back to this one, I think that the payroll company is probably not the starting point, because you have PPP probably if you're on this, and they just don't have that data. You should begin to look back at what the implications were to your business. Start with the number one by looking at quarter by quarter revenue drop and see if you qualify there, because that's the easiest way. If you don't qualify, then you want to start to look at the COVID impact, and then discuss with somebody, probably not your payroll company though, probably your CPA firm.
Would a nonprofit company established today, for argument's sake, be eligible for a PPP loan or any of these loans?
Not a PPP loan.
We needed to reduce workforce after the 8-week period. Can we apply for forgiveness in excess of our PPP1 now that the full 24 weeks with the forgiveness reduced to the original loan amount due to the workforce reduction?
I'm a little unclear on the question, but I think you're okay. If you met all the criteria at the end of the 8-week period, and your question is that you can't forgive now and because your bank isn't open, or you want to go to 24 weeks, I would try to keep it to the 8 weeks, because then you're going to have to meet the criteria over the 24 weeks. So if you could clarify if I didn't answer, I'd be happy to give more information.
Does SBA require any institution, corporate owner that owns more than 20% to guarantee the loans as well, or just individuals?
Any person or entity that owns 20% or more has to guarantee the SBA loan. If there is an entity where the individuals that own that entity then indeed own more than 20% of the business, then the individuals may be required to guarantee, but not unless there's certain circumstances.
ERC question, qualified wages, are those paid by employer only for Social Security only?
So qualified wages are the gross wages, which also includes the health insurance benefits you provide. So that's the first part of that question. The second part is does it only apply to Social Security? It applies to Social Security first, but then applies to all payroll taxes paid. And then if your credit's even greater than that, it refunds in addition to what you've already gotten. It's a refundable credit in addition to the credit.
Is there any relation to PPP-1 forgiveness and approval of funding for PPP-2? Should we hold off on forgiveness application if we're waiting for PPP-2 approval and funding?
There shouldn't be any relation. The only reason you want to hold off on the forgiveness application is if you qualify for the ERC.
I am self-employed, sole proprietor, no employees, never paid myself payroll. Whatever I net is compensation. I could go for a couple weeks netting zero and then have a week where I net several thousand. If I got a PPP loan for say 20K, in terms of qualifying for forgiveness, would I have to somehow average out the 20K and pay myself weekly, or could I just take the 20K in one lump sum as compensated and still qualify for forgiveness?
Yeah, your forgiveness will be based on what your earnings were for 2019. So whether it was a lump sum or it was spread out, it's annual earnings.
I'm having trouble with getting an SBA loan for my business. I started my business in December 2020. I have exhausted all of my personal funds to continue running my business. I'm not sure of the question, Jack.
If you want to reach out to us, Jack, we'd be happy to talk through the situation, but sometimes, I mean, the SBA may or may not be the best solution for you, depending on what's going on and where you're at and what your cash flow needs are. So
I did find his question a couple down. Can anyone help me with what my options are? And is there anything I can do at this time?
give us a buzz, Jack, and we'd be happy to talk it through and see if we can help you figure something out.
Revenue will be taken on global level or just those affiliate companies which are operating inside the US boundaries?
Just those, I assume this is for ERC because I think that's a follow-up to the prior question. It would just be on the US based entities because that's where the employer retention credit is on those US employees.
Let's say you got the PPP-1 and you have about 45 workers and you use the funds from May 1st, 2020 to August 12th. Would it be advised to try to get the ERC from August 14th to December 31st or orchestrate it in a different way?
Yes, that'd be ideal, assuming that you can hit the maximum of $10,000 per employee for the year paid in that period. So that's 4.5 months. If your employees make more than $2,000 a month, then you shouldn't have an issue maximizing the credit per employee.
How long do we have to file the 941X for Q4 2020?
You should have a few years, but I would suggest filing it as soon as possible, just so you can get your money.
Is the ERTC available for self-employed individuals?
Only if they have employees. So it is available to self-employed individuals, but not on their self-employed earnings. It's available to the amounts they pay on their employees.
Can you designate what wages paid during weeks 12 through 24 of a 24-week PPP period were the ones used for PPP forgiveness, therefore allowing you to use wages paid during weeks 1 through 12 for ERTC?
I mean, you're going to show what you paid, and you would do an analysis to make sure that you can maximize both programs, and to the extent that you can do it that way. But if you show more payroll than you need to, you can limit it to 60%, and they're only going to they're calling it a deemed election. Your payroll costs will be only those that you actually needed. And in those payroll costs, only the actual wages would matter. So it's a spreadsheet, basically, and you'll have that to support if you ever needed it for ERC.
So if the entire 60% was the only payroll paid in 2020, is there an opportunity to use ERC? I have not paid the 940 and 941 yet. There was opportunity to delay 50% to December 31st, 2021 and 12/31/2022.
So I think, reading into that, it's around the PPP. If their only payroll was the 60% of PPP, then they don't have an opportunity, because if they had to maximize all of their PPP and that only got them to their entire payroll for that period, then there's no extra payroll. There has to be extra payroll that wasn't covered by PPP.
Can you get refund check for 2020 ERC tax credit once calculated?
Yes.
Buying a business that was part of a public company in 2020, could you use the payroll for PPP?
I think you would have a hard time. You probably don't have the history of the payroll to demonstrate the need for the loan. It would be tough, but depending on the circumstances, possibly. Unlikely, though.
ERC, is there a time limit for filing for 2021 credit?
There's not really a time limit, but there is a time value of money limit. I mean, meaning you should start that process now, because if you could figure out the calculations today, you could start saving the money in your very next payroll check.
Does the limit of 100K salary still apply to PPP2?
Yes, it does.
What is the max payout to an owner who is also an employee of an S Corp for PPP round 2?
$20,833 if they had $100,000 of wages in 2019. It's going to be based off their 2019 payroll. If they were not on payroll, they're not eligible for anything.
Do you think it makes sense to wait to file PPP1 forgiveness to see if anything more significant comes out of Biden administration?
I do. I think maybe not if you're a larger loan, because it could also at this point go the other way. So far, it has benefited the borrower to wait, but that could also change. It could be that the larger loans, people don't think that they have a demonstrated need. So I think we're getting to the point, if you're not eligible for ERC, it's probably time to move forward.
Yes.
For ERC.
I'm sorry, Hannah, just a reminder to
Yep.
everybody that we have put in the chat our Google form, and if you want to give us, any one of us, permission to contact you with any follow-up information, you're happy to fill that out. But let's continue.
And Susan, thank you. Participants of the webinar will be able to access the recording for a second look. We will be emailing after today's session. For ERC, if you rely on sponsoring and speaking at conferences for a majority of your prospects and new sales, and in-person events were canceled and still haven't started again, and in addition to our prospects were not able to work from their offices in many states during the shutdowns, so we couldn't do our cold processing either, but we weren't down the 20% or more quarter over quarter. Does that sound like something that would be in the direction of qualifying?
Yes, it does sound like it's directionally headed towards qualifying. I agree.
Do you have to use PPP loans for payroll in consecutive weeks, or can you break it up however it most benefits you?
You do, because you have to meet the FTE calculation, which is an average over the pay periods, and the same with the salary. However, with the ERC, the way it's going to work is it's a deemed election. So the minimum amount of payroll that you need is what you'll use for PPP. So it shouldn't be the issue that you're thinking in terms of timing, unless it's a quarter thing. But reach out to us and we can see if we can help you with that.
For our 2021 PPP loan, we estimated our loan and payroll for 2 employees rather than last year's 14 employees. All over the PPP funds will go out as payments for payroll or rent over 24 weeks. Any issues with this?
I don't think so.
I don't think there's any issues with it, no, as long as you're meeting the criteria for forgiveness.
Do the FTEs requirement still apply to PPP loans of more than 50K but less than 150K?
They do, but you're not required to submit anything to your lender or to the SBA, but you should go through that test, and you are required for those loans.
Can I reapply to a second lender for PPP2 loans since I have not heard from the first vendor and it's more than 6 weeks? Does a lender get any kind of acknowledgement from the SBA for receiving the file?
You can apply to a second lender. We've had some of our clients move banks because of difficulties they had in the first loan. So you can go to a second lender. It is, you are starting over, so you do have to supply all the documentation.
Bob, I understood that question a little bit differently. It sounds like someone has applied at one particular bank for PPP2 and they haven't heard back in 6 weeks and they're getting nervous and now they want to submit an application to a different lender for PPP2. That's at least how I heard it.
Yeah. I guess if you have the SBA number already, I don't think you can reapply, but I don't know, maybe you know more than I do, but I haven't run into it.
If they've given you a PPP number already, that's what you need to find out. But if they've already locked in your number with the SBA, you're going to not be able to get a second one. So that's what you have to find out.
PPP2 eligibility says you can apply if you have or will spend the PPP1. Focusing on the will, it sounds like if you get funded for PPP1 today, you could turn around and apply for PPP2 immediately if you think you'll spend the monies in accordance with the terms. Thoughts?
I would agree with that line of thinking. You could do that. It's all about forgiveness, so you just have to make sure you meet the forgiveness criteria.
Can a company take the following position for a 24-week covered period? We took the ERTC for weeks 1 to 10, and then we used the leftover wages paid during the covered period to achieve PPP forgiveness.
Yeah, assuming there's enough wages for the PPP forgiveness, then and your PPP forgiveness application hasn't been completed and approved, then yes, there's no issue there.
I got my PPP1 on April 20th of 2020. Is it too late to apply for forgiveness?
No, your forgiveness has to go in 10 months after the end of your coverage period. So if you've elected a coverage period that is 24 weeks, you actually have until July to get your forgiveness application in. If you've elected 8 weeks, you're going to start to come up on it closer.
For the sole proprietor new calculation using gross versus net income, have you heard if lenders have received updated guidance on how to increase loan sizes?
No.
We haven't heard anything on that yet. That just came out last week.
To file for a 2020 ERC credit, would we use a form 941X or 944X?
The 941X, assuming you file 941s. I'm actually not that familiar with the 944s, but I think that's an annual filing for people who don't have quarterly filing requirements.
When I applied for forgiveness, you mentioned gross wages, health included in payroll, but can I be forgiven for health premium payments paid outside the paycheck? Can I still be forgiven for the 940 and 941 and state taxes?
Forgiveness for health insurance premiums, yes, if you have a non-discriminatory company plan. 940 taxes and 941 taxes are not part of the loan application, nor are they part of forgiveness. Some state taxes are.
Thanks, Kristen. Quick clarification. We reduced FTEs after the 8 weeks. Can we extend our forgiveness period to 24 weeks, apply for more than the original loan with the expectation the forgiveness will be reduced to the original loan due to the reduction of FTEs?
Do you understand?
I don't think you can reapply.
I don't think you would be able to reapply for the first loan at this point. Your FTE count, potentially if you use 24, the covered period will have no bearing on the loan amount. I don't know if that's what you're asking, but if you reduce your head count after the 8 weeks, but you can substantiate one of the 3 safe harbors based on economic conditions, you offer them their job back or whatever.
They left voluntarily.
They left voluntarily, and that you can substantiate that over 24 weeks, you can use that, but I don't know why that would benefit you. It will have no impact on the amount of your loan.
If I qualified for PPP round 1 and was funded for the maximum allowable, and now the PPP round 2 I applied using the same sole proprietorship, am I able to go back and amend PPP 2 using a new single member S Corp that I formed in 2020 in order to receive more funding than the maximum allowable amount for a sole prop? I did not have payroll set up for the new S Corp, but I'm currently in the process of doing so. And if I can amend the PPP 2 application, what is the deadline to do that?
The answer to that is no. You're not going to be able to go back and change if you didn't have payroll in that period of time, because the payroll measurement is occurring in 2019 or 2020.
Let's see sixes. Not sure.
Can a 501c6 organization apply for both PPP 1 and 2?
PPP 2, yes.
Yeah, in this round they can.
Yes.
Can they get? I believe they can get both rounds.
I don't think you.
All right, I'm not 100% sure if you can get both rounds, but yeah. Oh, you're right. Okay.
We are 100% owned entity of a foreign parent company. Our parent company is being traded publicly in some other countries. Are we eligible for ERC?
No.
We paid back our round 1 PPP due to the rules regarding the EIDL that made our PPP ineligible for forgiveness. Shortly after paying the PPP, they changed the rules and now we qualify for forgiveness. The question is, can we ask for forgiveness and get the money back paid to us?
That actually might be one of the other rules. The slide that we had about loan increases, there's actually 5 different scenarios that would make you eligible for a loan increase, but the other 3 I just don't see a lot. So this may be one of them. So I would talk to your lender about form 1502, saying that you'd like to reapply for round 1. You might be able to do that.
For SBA loan, can guarantors just guarantee the individual equivalent percentage, or do all owners have to guarantee 100% of the loan?
Anyone that owns 20% or more of the business is required to guarantee 100% of the loan. Limited guarantees as to percentage ownership and time, or limited to interest in real estate, is only for owners who own less than 20%.
For PPP 2 forgiveness, what reduction in FTE and compared to what previous FTE calculations will trigger a reduced forgiveness amount?
There's no set percentage that we can give you, because if you spend more over 24 weeks than you apply for, you're allowed to take the excess as payroll costs and the other non-payroll costs. So if you had $300,000 in eligible costs and your head count gets you reduced by 50, you're still okay if your loan was 200,000, because you're at 250 and you're fine. So it really depends on how much you've spent over the 24 weeks, because they allow you to account for more than the PPP loan itself. If you don't have that, then you could potentially lose by percentage based on however many you lost, but on a percentage basis.
I am the D80 question. Did you recommend walking into the lender, U.S. Bank, with the 2019 tax returns, 147C, EFTP docs? The outreach program team has not reached back out to me after asking them the same verified documents to number of times. Thank you.
I know that one bank for that EIN issue is requiring the borrower to come into the bank and show them this document, and then it got pushed through and the loan was funded within 2 days. And that's this was a large bank with another 2-letter beginning, ending in bank, so, but not US.
I missed your great answer. Are payroll taxes forgivable?
Only state unemployment, but not federal.
Right. Any other questions?
Ladies and gentlemen, we are going to kindly thank our panelists for all their patience and diligence in going through all of your questions. Reminder that there's a Google form out there if you want any follow-up information from us. We know these are difficult times out there. It is our pleasure and our honor, all of our organizations here, to provide as much support as possible to the entrepreneurial community. I want to particularly thank Hannah, our wonderful moderator, who we could not have done this without, and the support team at MultiFunding, who works behind the scenes to make all this go perfectly well. Thank you so much, and God bless everybody.
Thank you, Ami.
Thanks. Take care now. Bye-bye.
Bye, y'all.